The IMF upgrades world economic growth and underlines Australia's coronavirus killing dividend. The world's biggest fund manager says companies who aren't on board with climate change will see their stock prices smashed. And earnings season looking a whole lot better than expected. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. Now, Paul, I don't want to be accused of supporting the IMF when they come up with a number I like, but this is a number I like. Upgrading world growth for 2020 and for 2021.
Now, I can replay some previous Mad About Monies, Peter, where we've slammed at the IMF. Idiots. I think I can't recall how many times you said, who cares about the IMF? But maybe they're right at long last, Peter.
Well, my point is that the number can be wrong, but they usually get the trend right. Are we getting better? Are we getting worse? And what they're saying is the impact of vaccinations and the whole lot of spending by governments has all positioned economies to do a lot better than we expected back in March of this year, last year.
And President Joe's talking about $1.9 trillion and slamming it through the US Senate. So all that's got to be good for economic growth. How will ever pay for it's another question, Peter, but look, the economy here locally is going gangbusters. I've been a bit worried about some of the data coming out of the US and Europe, but maybe that's just a function of where we are in the cycle.
Confidence in America went up last night, Paul. People are dying left, right and centre, infections everywhere, but consumer confidence only in America. But let me throw one last thing before we go, Paul, and go to the next subject, is when you look at all of this, here is a country called Australia, known for being larrikins, and we were goody-goody two-shoes. We did as we're told, and look at the economic dividend, where we will be back to normal according to the IMF sometime this year. The rest of the world, 2022, UK and Japan, 2023. A big payoff for being goody-goody
a big payoff, and if you want to see evidence of that, just look at the employment data, just talk to just a couple of friends I know suddenly taking on staff. Have a look at the company profits about to come out. We'll talk about that in a moment. Peter, look, the economy is going gangbusters.
Okay, and on the subject of gangbusters, the world's biggest fund manager, BlackRock, basically is saying if companies don't get on board with climate change policies, they'll see their stock prices smash. What do you think, Paul?
Well, I think a lot of companies are on board, Peter. I think a lot, particularly Australia's major resource companies, have already moved down that path. I mean, obviously it's partly about the, devolving themselves to some of the resources, things like thermal coal that they don't want, some of the uglier industries. I mean, I think there's a lot of action already on behalf of Australian corporates. I do agree, I'm not sure they haven't already been smashed. I do agree that there's going to be a lot of fund managers and a lot of private investors who, for whatever reason, are going to say, I can't buy that company if they're involved in any sort of carbon intensive activity. And that's going to create less demand for their shares, and that's going to be a damper on share price. So I think there's some truth in that. What I do think is going to happen, Peter, is a lot of the so-called carbon intensive industries will be privatised. And the idea that we've still got the Nationals today, Barnaby Joyce writing about building a coal-fired power station. That ain't going to happen, right? I mean, I just don't understand what's wrong with the Nats. They just miss the obvious.
Well, right? the thing you're not recognising, Paul, is that if you think of the spelling of coalition, it's coalition. Coalition. So
you've been working on that one for a while, haven't you?
No, just sort of spoiling. But they won't give up on coal, and that's the interesting thing. But you're right, it'll probably go to private equity because the users of coal, India and China in particular, will keep using it until a better alternative comes around.
Yeah, I'm not saying there's not going to be demand for it, Peter. I just don't think people are going to invest in it. And that's what people have to realise. And the pressure on super funds and others not to own carbon intensive industries, companies, is intense and building. So I don't agree they're going to be smashed, but I would not be touching anything that's involved in carbon intensive activity.
Okay, let's go to the fact that earnings season is looking fantastic. JB Hi-Fi has done very well, Premier Investments, Michael Hill, Bapcor, Nick Scarlett, all these companies have reported much better than expected, Paul. And resources are going to do even better than them, I think.
Well, that's right. And today we've had Reliance Worldwide come out with a really good sales report and also an
That's basically a plumbing business to the world.
It is. Now, and they're major business in the US, Peter, and they're benefiting from that. Now, what happens, of course, in January, of course, most companies report their earnings in February, right? They have to by the 28th of February. However, as soon as the company becomes aware of anything that's material, it's got to tell the market.
Bad or good.
Bad or good. So what we're seeing is the December numbers come in. Before they're ready to do their final report, a lot of companies have to come to the market, and it's all called confession season.
Yeah.
We're in the middle of confession season right now. Yep.
Go away.
I wish I could do that. And all the confessions so far are on the positive side, Peter.
Yeah.
That tells us we're coming into, I think, a pretty good earnings season. We're seeing a number of, not just retailing, but a lot of companies involved in any sort of cyclical activities, things like Reliance with plumbing, going into homes. We're seeing construction in the US, home sales at record numbers. We're seeing the same in the Australian market. So I think that lines up for a pretty good earnings season, together with record amounts for some of our major iron ore companies, right?
Just big dividends coming up.
Big dividends coming up. And banks should be better simply because if they're not going to write back any of the COVID-19 provisions, they won't be making any more. So we're in for a strong earnings season. Seeing the same in the US, Microsoft out after the bell today with a pretty good number. Revenue up, I think, 13%. The stocks jumped by 4%. Just to give you a bit of context, it wasn't that long ago, Peter, I tipped my 4 technology stocks, which were Xero and NextDC. NextDC hasn't done a lot. Xero's up. The 2 US ones I said, Microsoft and Apple, and they're up about 30% since I wrote that in late October,
I think
right?
you even said something positive about Tesla too.
I have never bought Tesla, Peter, because it's so crazy. But I said if you want to get lithium, get into Tesla. But look, that's not to say I'd be buying it right now, just in that caution. But just to show you the powerful of big tech, those 2 companies are up about 30% in the last couple of months.
And the important thing is these numbers that we're seeing already and the ones coming out kind of prove that the stock price or stock market surge isn't coming from La La Land, which a lot of doubters actually were suspecting. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.